So hi everybody, nice to meet you all. As it was covered off and is on the screen, my name is Steve Glick. I am the director of mortgage sales here at HomeAbroad. HomeAbroad is a company where we specialize on assisting foreign nationals with purchasing U.S. property here in the United States. So financing for people who don't have U.S. credit, who don't have U.S. income, don't have residency here in the United States, that is our specialty. So hopefully I can kind of give you some clarity and walk you through a little bit of kind of how this process works and how easy it can be to actually buy U.S. property with financing here in the U.S. Personally, I have been in the mortgage industry for 13 years. I've done everything from working for big global banks all the way down to startups with everything from sales to operations to marketing and everything in between. So hopefully I can answer any questions that you may have as well. Here at HomeAbroad, we specialize in what's called non-qualified mortgages. So we'll talk a little bit more about those different products a little bit later on in a few slides, but essentially meaning that we can do loans that big banks can't. So where when you walk into a large bank here in the United States and you want to get a mortgage, their first thing they're going to ask you for is what is your credit score, what is your credit profile, and where do you earn your income. Those things obviously are more difficult when you're not from the United States. So those are the things that we have more specific mortgage loan products and services that can help people who cannot walk into a bank or cannot call up a large financial institution here in the United States in order to qualify. So go ahead to the next slide for me. Great. So just a little bit to touch on here is how large the foreign national market is in terms of investment real estate here in the US. So, what Ogie and Tamika are talking about is not something that is, what I would consider a niche product or something that is not touched upon or something that has not already been proven to be successful. So over the past, between 2024 and 2025, foreign nationals accounted for roughly $56 billion in property ownership here in the United States. Our estimates are that it could have been or should be probably double that. I think the biggest deterrent is education. So congratulations to everybody who joined this call, because now you're a step ahead. Because the education and realizing what is truly possible is probably the thing that holds most people who are outside the U.S. back from going ahead and pursuing an opportunity like this. Year over year, this market, the foreign national market for investment property, is growing exponentially. So we are seeing 30, 40, 50% year over year of people wanting to come invest their money in U.S. real estate. It's got huge untapped potential. There's a tons of affordable properties available here in the U.S. that are going to both be cash flow positive, so you'll be earning cash month over month, as well as long-term building of equity and appreciation on that property. Go ahead, next slide for me. So why U.S. real estate, right? So I know Ogie and Tamika have touched on this a little bit, but just to kind of reiterate and add a little bit to that. First thing is that combination, right? High rental yield plus the ability to have an appreciating property. So what do I mean by rental yield? Okay. So if I want to buy a house, let's say in the UK or in Canada, right? Or in many countries in Europe, they're going to cap how much I can charge in rent. So there are regulations, there are things that prevent landlords from being able to year over year increase their rent to offset any expenses that they're incurring on, to own property, whether that be taxes or insurance or things like that. In the United States, those sorts of caps do not exist, right? So it's truly the opportunity where you can earn year over year guaranteed cash flow, and you can ensure that cash flow is increasing or at least holding steady no matter what additional expenses you incur. So as property management fees change, as insurance rates go up, as property taxes change wherever you happen to be buying, you're able to continue to earn that cash month over month. The other big advantage is the United States is unique in the sense that we offer 30-year mortgages, meaning that your monthly payment on your loan is spread out over a 30-year term, keeping your monthly payment relatively low, which again further ensures a high cash return. So when I say a 30-year mortgage, I don't mean you're required to pay that loan for 30 years, right? Most of my clients end up either selling a property or paying off that mortgage much more quickly. But you have that option, and it does give you a lower minimum monthly payment, giving you more flexibility. You can choose other products as well. The other nice thing about the 30-year mortgage is that it can come with a fixed interest rate, meaning that the price that the monthly payment that you're going to pay month one will be the same monthly payment that you pay month 360 if you keep that mortgage the entire time. So why is that an advantage to you? It's knowing it's having a set expense, right? It's knowing that that expense is not going to fluctuate as the market shifts. So again, in most countries, your interest rate is usually fixed somewhere between 3 and 5 years. Some even annually it can change. So if the market goes up and interest rates increase, you are then subject to that change. You're protected from that here in the US. However, let's say rates go down. You do have the ability to refinance your loan into a lower rate, really at any point in most cases. So what else can you do here, right? So leveraging property appreciation. So we talked about refinancing, I just mentioned, to get a lower rate. Another reason many of my clients choose to refinance their mortgage is to access the available equity in their property. So after a few years, as that property continues to appreciate and you're paying down on your mortgage, you have this chunk of money available to you through the actual asset. So what you can do is you can refinance that loan, access that equity in what we call a cash out refinance, and use that money for your next property, for a down payment on the next property. So what your investment is doing, right? It's serving as a vehicle for future investment. So you're not continually dipping in to savings or other investments. It's a self-driving vehicle. In addition, you can qualify for these loans without any US credit, without any US income, and without any US residency. The way that you qualify for a loan is using the actual rental income that you will earn on that property. So when you go to purchase a property, Tamika can help you with this, Ogie can help you with this, I can help you with this, is we're going to run an investment analysis for you, right? And as Ogie mentioned earlier in this call, is we're not going to guide you or help you, through a loan or through a property purchase if that doesn't make sense for you. We want to make sure that it's cash flow positive and that it's a strong investment. And these loans are actually built in to have that protection. So you will know that this property is cash flowing with a positive, what we call ratio, meaning that your monthly income is higher than your monthly expense. So we'll be able to qualify you using those parameters right up front. We talked about the secure and stable investment, right? Obviously, the US dollar, the US market, US real estate market, it's an appreciating market year over year, historically. And then the last bullet is really important as well. So the US is truly a free market for real estate investors. And what I mean by that is there's no restriction if you are not a US citizen to purchase property. You're not limited on how many properties you can own. You're not limited by additional taxes, right? You might hear things called stamp duty or stamp tax in many countries. So if you are not a citizen or not a resident of that country, you're subject to additional taxes or fees. That does not exist in the United States. It's a truly free market. So the same thing. So whatever a US citizen would pay is the same that you would. Okay. Next slide for me. Okay. So why finance? When you may think to yourself, well, I could just go and buy $150,000 property in cash or $200,000 property in cash. Why would I take a loan? So the first thing is being able to diversify more quickly. So being able to go ahead and leverage this financing to allow you to purchase more properties more quickly. Buying one house, right, will earn you a certain level of equity, a certain level of cash flow month over month. But buying 3, 4, 5 houses over a short period of time will allow you to maximize, right, while still being able to hold on to your personal assets. So those assets can be used for other investment to hold on to, right, in case of anything that you may need, right? You never want to deplete your personal assets just to own a property, right? So we want to give you that flexibility. You can then use, as we talked about on the last slide, use that equity, right, to then redeploy capital. So taking a cash out refinance, using those funds that are available within that property to then go ahead and buy your next house. So we see clients who are buying 50, 60, 70 properties, and they're doing it over a relatively short amount of time because of that combination of appreciation on the property plus monthly cash flow. And then again, Tamika mentioned the currency, right? Being able to earn these funds in US dollars, having the asset held in US currency just gives you just that strength and peace of mind. Okay, go ahead, next slide. Now I have a couple, these are real life examples. These are clients I worked with personally. The first is a Nigerian investor that I worked with last year. He's actually looking at buying his second property now. He bought this house last year. He was going to be doing some traveling to the US. He had plans where his child was going to come to the US for university. He was going to go to college here in the US. So he wanted to have this investment ready, have everything here. That way, if he ever wanted to either use the property personally or being able to pass the property to his son or, have the flexibility, he already had the property in place. So instead of buying it in cash, he was able to use half in cash, half he got financing. Okay. He reduced, so that gave him a really strong rate, really strong terms because of the amount that he was bringing. He utilized what we call a full documentation loan, meaning that we were actually able to qualify him using his self-employed income that he earns here in Nigeria. Okay. So again, lots of different products, lots of different options for our clients. And then this individual is just a B1, B2 visitor visa holder. So does not have residency, is not a green card holder or a US citizen, just has the ability to come to the US on vacation or to visit, and that does not stop him from qualifying. Go ahead, next slide for me. This client is, he's actually one of my favorites. So he purchased 4 properties in just the past year. He decided, he's from Turkey. Again, a B1, B2 visa holder. He originally came to me with a plan. He said, I already have my US-based LLC set up. I've already set up my US bank account. I have this amount of money. I think it was somewhere around 220,000 US dollars that I want to deploy to buy a property. What do I do? His original plan was to go find a house that cost that amount, buy the one property, and start his investment journey. After speaking with him, we realized that we could go ahead and take leverage, right? Take a loan, and then he could go and buy multiple properties in a short amount of time. So he just took a 30% down payment on each property, purchased these 4 properties all within an 8-month period, and is now deploying each of them, right, as rental properties. So he's earning cash month over month, right? Somewhere between $500 and $800 a month he is earning an income on each and every property, to compound that with the fact now he has these assets that are going to earn him that long-term equity and appreciation. Okay, go ahead, next slide for me. So let's talk a little bit about the products. So there are multiple different ways that you can get a loan here in the United States. The most popular is what you may have heard or may hear down the road referred to as a DSCR loan. So that stands for debt service coverage ratio. Um, it's not really that complex. Essentially, as long as the rental income covers the monthly expenses on the property, you are qualified from an income perspective. So what we consider as a monthly expense is going to be your mortgage payment, plus your property taxes, your homeowner's insurance, and any applicable homeowners association dues. So if you purchase within a community where they charge you a monthly fee, the rental income should cover all of those expenses. We'll check that on the front end. It'll be verified by an appraiser. It'll be verified through an underwriter. So you'll know right up front that you are buying a sound investment. What's great about this product is that there's no income verification from you personally. You are not required to have U.S. credit in order to qualify, and there's no reference or check of any foreign credit. So, and whatever property you own, whatever assets, whatever debts or that you incur in any other country, do not apply. It's only considered what you own and what you have in the United States. Many of my investors also choose to get involved in rehabilitation projects. So they may want to buy a property that is in need of rehab. They want to hire a general contractor to come in, renovate the property, which will give them instantaneous equity in that property, and then also be able to enter at a lower price point. And then you can go ahead and either rent that property or immediately turn around and sell it for a profit. We offer loans for that type of financing or for that type of plan. What you can do, you can get what's called a bridge loan or a fix and flip loan, which allows you to get financing for the purchase of the property as well as the renovation costs. So if you want to buy a house that costs $150,000 and add $50,000 in renovation or rehabilitation to that house, we are able to help you finance most, if not all, of that one. Then once you've completed the project, you can then refinance it into a longer term loan like a DSCR loan, or turn around, pay off the loan in cash, or go ahead and flip the property for a profit. So lots of different flexible options there for you. That's really popular with my clients who are either looking in a specific area and they're having a hard time finding rent-ready property, or if you're looking for a lower entry point. As I mentioned in my first case study, we also do offer full documentation loans for foreign national buyers. So that would be a verification of your foreign income as well as your assets. So you do not require, again, you're not required to have U.S. credit, but you will have to show your U.S. income. What's really nice about that, especially if you are a self-employed individual, is we can qualify you just using a letter from a certified accountant or CPA in your home country, verifying your last 2 years of earnings. So we're not going to need tax returns or pay stubs or other things to verify that income. Simply a CPA letter showing how much you've earned and your percentage of ownership in that property, in that business, will allow you to qualify with income. So it actually still remains very easy and very streamlined for you. Bridge loans and commercial loans, right? If you're interested in commercial property, we can have more of an offline conversation about that. But long story short, it's not really too much different. There's just a little bit more scrutiny in terms of analyzing the property. But commercial loans are definitely available for foreign nationals as well. And then bridge loans are really if you're looking to purchase a property very quick, maybe it's a foreclosed home or a short sale, and you need those funds in a very fast manner, we do offer that option as well. So generally your requirements, 25% minimum down payment in most cases, right? You can bring more, but you typically a minimum 25% of a purchase price. We talked about a 30-year fixed rate mortgage, right? Which most of my investors do choose. You can choose a adjustable rate mortgage as well, which is typically fixed for the first 5 years. There's also options of interest-only loans where your actual monthly obligation is even lower. So lots of different options there for you as well. Closing is very fast, 30 to 45 days, right? I've had customers who I've closed in 14 days. Really, as quickly as we can get the loan done for you, you'll be ready to close and start earning your income very, very quickly. And then in most cases, you can sign right from where you are sitting. So we allow remote online notaries with many of our loan programs, meaning that you'll join a Zoom call just as you are today. There'll be a US notary on the other line. You'll verify your identity and be able to sign documents right over the computer. Most cases that is available. There are some instances where you would need to go to a US embassy or something like that. But we can always, if you run into that situation, we can always cover a good option for you to sign. But again, no personal income verification needed for most of the products, no travel to the US, no US visa required in many cases, and no US credit. Okay, next slide for me. So we touched on it a little bit in the last slide, but just to give you a little bit more information on the DSCR loan versus the full documentation loan. DSCR loans are really the bread and butter of the non-qualified mortgage space. So this is really the most popular product for our investors, both domestically and internationally. The reason is every deal is looked at within a bubble. So meaning that property's income is what is verified, not your overall income, not your overall debt obligations, either abroad or in the US. It's really just that one singular property. Where this becomes really beneficial is when you start owning 5, 10, 15 houses. Most banks here in the US will not allow you to continue to get financing from them. They have caps, they have limits. This product does not have that. So you can own as many properties with as many mortgages as you want, and each property is just looked at individually for its own qualification. It's really a beneficial product for anyone with complex income. So if you're earning income from different countries or declaring it in different ways, or you have a mix of self-employed and salaried income, it's very hard to qualify using traditional financing. This gives you that alternative. It allows you to qualify as a foreign national, as we mentioned, without any credit or income verification. And it also ensures that you're buying a strong property, a strong rental property. So is this investment sound? Is this a good idea for me? You'll know right through the processing and right through the underwriting of the loan. Full documentation loans, right? There is a need and there is a benefit for them as well. So if you're earning a high amount of income, right? If you have very easily verifiable income, sometimes the terms can be a little bit stronger. So you may find a slightly lower interest rate and things like that. It's really good if the property may not qualify, right? So if you're looking to just buy a property for long-term investment, you want to build the equity, you possibly want to relocate to the United States or use it as a vacation home down the road, you can qualify using this product as well. And then any property, once you hit a certain level, right? So if you're looking to buy very expensive property, right? Usually $1 million or more, those properties sometimes do that DSCR ratio I mentioned doesn't always work out. So we have another option. Okay, go ahead, next slide. And then this talks a little bit about the documentation. So I keep saying the word easy or simple or streamlined, right? But it doesn't really resonate until you understand, okay, what do I need to have to qualify? So foreign national, must have a copy of a passport. In some cases, we will require a visa. If you don't have one, we'll make sure we place you in a loan product that does not require a visa. You must be able to prove that you live somewhere. So a utility bill, a phone bill, bank statements from your country, which have your address and your name. That's as simple as it is. Bank statements. So initially, we will allow you to have your assets outside of the US. Prior to closing your loan, you will have to move the assets that you'll be using for closing to the United States. So most of my clients will open a US bank account. either by coming to the US to open it or by doing it online. So there's many different options now, to anything from things like Mercury or Wise. A lot of these banking as a service institutions, which you can open that bank account right from your home country, and we recognize it as a US bank account because it includes a US routing number and a US account number. And it's tied to an insured US financial institution. So it's peace of mind for both the lender and peace of mind for you, knowing that that money is insured. So it's protected. You also have the option to just transfer the money directly to the closing agent. So every loan that you get in the United States will include either what's called a title company or a settlement agent or a settlement attorney. The reason this is important is because it provides you with protection, legal protection and security, knowing that your money is protected and that your transaction is protected. So these are the only individuals typically who will handle closing documents, who you will wire your closing funds to. You will not send me the money. You will not send Ogie or Tamika the money. You will send the money directly to a settlement agent, right? Somebody who is authorized to handle that transaction. So you'll just have to prove. So again, back to the documentation, you'll just verify those funds are available in the United States. If you choose to open a US-based entity, like an LLC, which many investment clients do, right? And it offers you both tax and legal protections. You just get a copy of those entity documents up front as well to review them to make sure that the way that they're written fits the transaction. If you're looking for a DSCR loan, we'll need a purchase contract. Once you have one in place, you'll get property insurance. We can provide you with insurance quotes. It's very easy. You can call around and get as many quotes as you want and pick insurance from really anywhere that you choose. You'll have an appraisal done on the property. And then we'll work directly with the title company to obtain a title commitment, title insurance, property tax information, and all of those pertinent documents. So we will handle all of that for you, not something you need to do on your own. And then again, for full documentation loans, an employment letter, CPA letter, just verifying your income. Okay, go ahead, next slide for me. So just to summarize, how can we help you? So at Home Abroad, we're gonna make sure that whatever your personal situation, your personal goals are, that we make sure that the financing fits. So whether that be a full documentation loan, a DSCR loan, a bridge loan, where do you want to sign? How much do you want to put down? What's your visa status? What's your income status? We will tailor a solution to fit our clients. I find that it is very few and far between where we have to tell somebody that we cannot offer them financing. We have solutions for almost everything. We also, I would say, I personally believe that our mortgage rates are as competitive as anywhere that you'll find in the market. Typically, you will find that on the same deal, a US citizen will pay somewhere between 0.5% and 1% lower interest rate than a foreign national will. So it's not a big difference. So if a US citizen is going to pay 6%, as a foreign national, you may be looking somewhere between 6.5% to 7%. But again, when it's based over a 30-year term, that may be a difference of $30 a month. It's not going to be some huge difference in the amount that you'll owe or the amount you'll have to pay for that. Because of that 30-year amortization, as we mentioned. Okay, go ahead, next slide for me. So you've heard a lot. You're right. You've heard Ogie talk. You've heard Tamika talk. I've talked probably a little bit too much, but talked to you a lot about what's available, what's possible. So you want to ask yourself a few questions, right? The first question is, should I consider financing, right? So will that help me? Will I give me more flexibility, allow me to hold on to more of my assets? Is it a benefit for me? That's the first thing they're going to want. The second thing is, once I find a property, does the ratio support the loan? Meaning that, is this a sound investment? What is the rental income in the market that I'm buying? What is the monthly housing expense that I'm going to incur? Ask. Ask me, ask Tamika, ask anybody, right, who has expertise in this area to run an analysis for you. We are absolutely happy to do that. What product is better for me? Should I be thinking about full documentation loan? How long do I intend to own the property? That's another question you want to think about. Is this a long-term investment or a short-term investment? A lot of that will determine what product is best for you. And then how should I own? How should I hold the property? How should I own it? Individual, LLC, right? Do you want to have protections? Do you want to be able to pass the property down to family, right? A son or a daughter or something like that down the road? Take all of those things into consideration and make sure you get all those questions answered.